Founders looking for capital have their pick of the litter, don't they? Whether it's PE, VC, SPAC money, there's a huge pool of liquidity out there. Is it really about who's got the deepest pockets, or is there a secret sauce that investors bring to the table?
That's an excellent question, Sri. And we believe that ultimately capital is just one part of the solution. Ultimately, it's all about skill. Can the entrepreneur in a capital efficient way scale its business? And in our region, that would mean scale its business not only in one market, but across like 6 relevant markets in the region, and not maybe only in one business model, but multiple business model in a deeper stack. So what investors can do is help companies on that path, not only through capital, but also through, maybe some of the lessons learned from earlier ventures. So at Asia Partners, we believe that, you provide capital, but then you also have to provide a certain value add to the entrepreneurs. But ultimately, it's up to the entrepreneur, whether he has, those skills to scale the business in a sustainable manner.
And let me bat it over to you, Nick. And following on from Oliver's point there, what, in your opinion, do SPACs bring to the table in terms of the value add proposition?
Well, SPACs have an important role to play. It's, I would say, yet another tool that goes into that giant automotive mechanics box with lots of wrenches and gizmos and gadgets. The SPACs have offered 2 things that are useful, and I think huge credit to our friends Anthony and Ling and Ming at the Grab team for completing the world's largest de-SPAC transaction in history just a few days back. Number one, the SPAC basically unbundles the IPO from the actual target identification. In the old days, you had a target, it went public all at the same time. Here, the capital can effectively be pre-raised, or at least partially pre-raised, and then it can be brought to bear in a more deliberate sort of way. That's sort of one important point. The other point, which I think has been a little bit of a regulatory arbitrage over the years, which is still being sorted through, is that under a traditional way IPO, it was very hard to put forward a 4 or 5 year forecast for the company. But as anybody in the M&A business knows, that is de rigueur for looking at a company and making an informed, board-approved choice. The SPAC route, because there was an M&A transaction, afforded the flexibility to provide a longer-term forecast than what was done through the kabuki dance of the research engagement during traditional IPO. And then finally, to a certain extent, during the pandemic, and I want to emphasize this is probably a tertiary factor, having the capital pre-raised stateside was a slight logistical benefit when travel had sort of shut down. That will probably burn off as VTLs open up again and people are willing to get themselves back on the road. But there is something like having a face-to-face interaction, and if a group of promoters in the States can go meet the investors ahead of time face-to-face, talk to them about the strategy, that is a modest benefit as well.
But as a follow-up to that, Nick, if I can try to work out here for our investors and our viewers what the takeaways are from the disappointing debut for Grab, how much of it was because it went the SPAC route to market? Because a lot of the investors in SPACs aren't necessarily in it for the long term. They might just be wanting to make a quick buck and do a short-term trade.
Well, it's a great question. And as the old saw goes, my dad would always tell me, happiness is the difference between expectations and reality. Never mind the fact that a wonderful company went public at close to a $40 billion valuation. That actually is the primary historical fact. The fact is the stock was a little wobbly after the IPO. We've learned through just being in the markets a very long time that in the short term, the stock market is a voting machine, and only in the long term is it a weighing machine. So we would let this one play out a little bit and let the business be judged on its own merits. I don't think a lot had to do with it being a SPAC, to be totally honest. I think a lot had to do with just near-term tactical dynamics around the valuation and the trading dynamics, but it doesn't take anything away from the gravity and the import of the achievement that our friends at Grabs have accomplished.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.